back on. Give it just a minute for some people to pop back on. Let me know if you guys can see me. I know Sam had this problem, I think the first couple days this week, where he had to redo the chat, redo the live stream three times. So this is the first time I've had to do it. So just pop on. Let me know if you guys are back. If you would, let me know. Got my charts back up here. See if we can make it another hour or half hour or something, whatever it gives me. I'll give you guys a minute to pop back on. Pop back on if you would. Gosh, I hate it when this stuff. I hate it when technology doesn't work right. But that's the way the cookie crumbles. I'll just talk to myself for a minute till you guys pop back on. Oh, alert hit. What have I got? Pound Aussie dollar. All right. Pound Aussie dollar alert just hit. What have I got over here? Let me turn my drawings back on. Okay, I want to short this one for sure, guys. For sure, I want to short it because Pound Aussie is giving me a bearish score of a -6. Take a look back over here. Pound Aussie -6. Okay, the technicals aren't looking great. Retail crowd is net long. So if they're net long, that means I want to be going short. Okay, observe the masses and do the opposite. Pound Aussie. MPMI, short. Okay, retail sales, CPI, the inflation, okay, and the unemployment rate. All this stuff is favoring Aussie more than British pound. So pop back on over to my chart since my alert just went off. On to Pound Aussie. Let's see what we got. Now, I'm not 100% certain I'm going to take a trade right here. I just more so wanted to eyeball this supply zone that we had overhead. So this is the one that we just came into right here. Just came into this supply zone right here. Yeah, there's some pretty good trading, pretty okay trading volume there. I mean, it was a yellow candle, but it's not like it was a ton bigger than recent candles. So, you know, so I like it because it dropped really nice. Problem is, it dropped into a higher time frame zone. See this big green ugly monster below? And that's a 4-hour zone that we just dropped into. Would have been Tuesday, yesterday morning, actually, in our intraday session, or in our stream, actually, pretty close to it. So we dropped into that demand zone, and from there we're obviously going up nicely. Now the context is lower lows, lower highs on 4-hour chart. But then if you flip it around to, let's see here, a 15, it's pretty sideways, I would say. But we've just recently bounced into this supply. So do I want to trust a 5-minute supply zone being stronger than a 4-hour demand zone? Probably not. Probably not. I just don't think so. So let's see here. Let's scroll back out on a 5-minute. So keep in mind the context on this. Okay, the green rectangle is a 4-hour demand zone. Now you also see a white line there. Well, that's because that's going to be probably a 1-hour demand. So we got a 4-hour demand, we got a 1-hour demand. That's confluence. It's a 4-hour, 1-hour confluence. And then this zone that it's just now going into is only a 5-minute supply. So I don't think. Good morning, Sac Savant. Good morning. I've already lost my stream once, but I'm back on. Just like a cockroach, can't kill it. So let's see here. And yeah, just to let you know, since I don't think you were on a moment ago, I'm going to hook up with my one of my production guys and have him get me up to speed on another third-party program. That way I can send the YouTube studio through it and it doesn't drop streams and it doesn't drop charts. Okay, so that's going to be my goal for Monday. Gold, yeah, we could definitely take another look at gold. Hey, Jerry, welcome back. So yeah, guys, the bottom line is I'm not too excited about this 5-minute supply zone since it's bounced into a 4-hour, 1-hour demand zone. I think that we could get a reaction, but I don't see it being strong enough. You know, we might get a reaction, something like this, but I could definitely see it just continuing through on the pound Aussie dollar. Because remember, price likes to find higher time frame liquidity, higher time frame. Well, I mean, it likes the lower time frame liquidity because that's where most retail traders play, but it likes the higher time frame zones to go find that big, massive unfilled orders. So yeah, we've hit a demand back here, which pushed it up, and now we've hit another. So yeah, we're going to go ahead and ignore this 5-minute supply zone. Okay. I mean, on this last 5-minute candle, it did wick through nicely and close at the 50% line. I'm not saying it won't turn around. It very well could, but I'm just not willing to wager money on it. I'm not willing to, risk some of my dollars on it. So we'll come back to that here in a little bit, see what it's done. Yeah, I did go through gold earlier, but we could definitely take another quick stab at it. Yeah, there's really, when it comes to gold, my higher time frame zone of choice is going to be this deeper one down here. I have an alert set on the XAU USD at 42.40 because that's going to be the daily demand zone, which is the yellow rectangle. Okay, if I go to a daily time frame, it's going to be this candle here. Why this candle? Well, because that's the first candle to give us a gap above it, right? So just taking a look at the gap. Excuse me. Okay, this is going to be our gap, that white box. And that's all from this daily candle. Now, there's another thing that I really kind of dislike about this zone. If you look to the left, we got way too many daily candles there. Okay, all that. Let's kind of do this. Okay, all these candles. To me, that might be too much time spent at that price. If price is at that price point, that range, okay, we're talking this whole range right here. If price is in that range for, looks like over a week and a half, if I'm a big bank, do I have enough time to potentially get my full order in that? My full long order? Probably. Okay. Possibly. And so that's just not something I'm 100% willing to risk money on if price returns as a daily trader, right? And if I do get into this trade, then I probably wouldn't be risking a lot. Okay. You guys know, or maybe some of you know, I tend to risk in a range of 0.2 to 0.5% per trade. It's not sexy, but it's going to keep me in the game a long time. Okay. So like I started at the outset talking with one of you about algo, I believe it was. Yeah, it's not sexy. Okay. But technical analysis books, traditional ones, teach max risking at 2%. Well, most of them do. You might get one to say 1% here and there, but for the most part, it's 2%. Well, yeah, that's for a seasoned pro. Excuse me. Right. If you're relatively new, a couple years or so, 5 years or so, okay, that's a little too much. The most successful prop firm traders, from a report that I read, the most successful prop traders are only risking 0.5% per trade, 0.5. 0.5. Okay. Because with that, you can sustain a pretty good loss, right? A losing streak, several losses in a row, and you haven't breached your account. Okay. Number one, you haven't breached your daily, because you shouldn't be. If you're losing a 0.5% trade, you don't want to be. You don't want to have any more than about 2 losses in a day. If you get to 2 losses, regardless. Sorry guys, I got a frog in my throat. If you get to 2 losses in a row in a day, that's when that's when you'll hear a lot of times, a lot of people, a lot of mentors I've had that say, just stop trading for the day, go take a walk. Right? Two losses. So 2 losses for me at a 0.5%, which is my max. Okay, that's only 1% total of my account. But if you're somebody that's doing 2%, you get a couple losses. That's 4%. It's much bigger, much bigger. Think about that. That's 4%. And what are the loss minimums allowed on trading on prop firms, right? Some are 5, but for the most part, a lot of them are 6%. Some are 8%. Some are 10%. So if you're losing 4% in one day at the recommended maximum of 2 losses, 2.5 days, you're out. You've breached your account. So that's 2% for you, right? That's the math just doesn't add up. But when we know that our win rates are probably going to be somewhere in the 30 to 50% range, give or take. Right. So that's why I'm happy with a 0.5%. It's what I was taught, and it's what I'm sticking with. Now, early on in my trading career, I didn't do that, especially when I had a penny stock account. You want to talk about the Wild West of trading? That's penny stock land. I wasn't even paying attention to my risk. I was just looking at flat dollar amounts. Okay. See, what did I have? I had a $2,500 account. I was risking $100, $200 every time. That's too much. That's way too damn much for a small account like that. So needless to say, it didn't take me but about 4, 5, 6 months to blow it. So, but it's good. Blowing an account is good because there's no better teacher in the world than losing money. Blowing your account, right? Seeing what you worked for go down in flames. So I consider that a rite of passage. I don't know about you guys. Blowing an account. I mean, it's obviously not something we want to do, but you'll damn sure remember when you get your ass burned from it, right? So great teacher. And that's why Algo was on earlier and said that he just blew his account, right? Hey, I guarantee you that's going to teach him more lessons than any of us coaches can teach, right? Simply losing money. Nobody wants to lose money. It's the worst thing in the world. So anyway, I digress from that. Just going back to the gold here. Yeah, that's the first place I'm looking at, Saxavant. And specifically the 4-hour demand down here, which is 42.26. We're still a ways away. But at the same time, this is a pretty strong drop. Okay. Well, we've had pretty strong drops like this recently. Okay. We had one obviously back here in mid-November. We had obviously this giant one back here at late October. Okay. But we got to keep it in context. And it's just nothing more than a pullback and a giant uptrend. And the fundamentals and the sentiment is still in the favor of metals, right? So I think that's a pretty good pullback. I think that's a pretty good price point. What's our moving averages look like just for kicks? Okay, so daily chart, look at that. We got our 50-period moving average, which is starting to come into that zone as we speak. So by the time price comes down, it looks like we could get a 50-period bounce, right, on a daily chart. And obviously we could step it down, okay. On a 4-hour chart, that's the 800-period moving average, just ahead of. So I don't use moving averages a lot, but when I'm anticipating a big drop to a higher time frame demand zone, I just like to pull it up from time to time just to see where it's at, see where they're at in relation to price. Yeah, see, weekly is not going to really do anything. Yeah, I mean, VWAP is also a great thing to use, but this thing's just been going parabolic. Like, where do you even put one? Maybe this point right here. I don't know. Let's take a look. See, that's not really going to help. That's still way too deep as far as getting a bounce. How about right here? Okay, there you go. So look at this. So this is a swing low, and look at where VWAP's going in as we speak. Again, this is a daily chart. I like that. I like that as a confluence. It's nothing more than an odds enhancer. This is just an odds enhancer. Okay. The reason for getting into the trade is because of the unfilled orders in the zones. But the odds enhancer is the fact that VWAP, okay, volume weighted average price, is rolling right through it. Now, VWAP is something that I used in penny stock land, and it helped me a ton. So I just naturally kind of learned how to incorporate it into currencies and all these other assets I trade. And it works pretty damn well, I got to say. Works pretty well. So yeah, VWAP trying to roll in. And I think I even shared this with you guys the other day, but VWAP is one of my odds enhancers down here. Okay. See, trade volume. Okay. Order of operations. Remember, for me, it's supply and demand zones with strong gaps leaving the zone. That's number one. Number one reason for me getting into any trade. And then there's the master pattern. Hey, am I buying under value? Am I buying over value in the premium? Okay. And then, yeah, the main odds enhancers. Okay. Momentum on a retracement leg. It's got to be less than the strong zone leg itself. I don't want something coming in hotter than it left. It's got to be a little bit lazier or slowing down or starting that little curve, right? Engulfing candles, obviously, that's one of my main reasons to get into a trade when on smaller time frames when price enters my zones. Obviously, volume spikes. It's nice to see an RSI divergence. Okay, get that momentum starting to shift, and then obviously breaks a structure, right? But yeah, as far as my other odds enhancers, VWAP is definitely one of them. Master pattern midline bounces, the fibs, guys. Fibs are one of the most popular thing. I don't use fibs to get into trades, but I just use it. I use fibs to see where the retail traders are trading. Because remember, I'm trying to think like a bank. That's really the goal, especially as a currency trader, because the banks trade the bulk of that volume. So again, is a Fibonacci retracement, is it going to create liquidity in and around one of my supply or demand zones? Right. That's what I love about Fibonacci, but never as a buying or selling decision. It's just as a look-see to peep on the retailers and see where they're at. And then, yeah, support resistance, same thing. Okay. Just looking for those liquidity grabs, and even trend lines as well. So yeah, I just thought I would kind of go through that real quick. So yeah, that's my gold play. Okay. There's not really a whole lot to be done today. Now, if we wanted to be aggressive, we could sell all the way down to the zone with the anticipation of buying at that point. It's going against the fundamental picture, which is bullish. But again, price likes to bounce from supply to demand and from demand to supply, the higher time frames. So if I know my higher time frame demand is down there, right, and my higher time frame supply is clear up here, I mean, that's a pretty sharp drop. Why the hell wouldn't it come all the way down here? It acts as a magnet. So if you really wanted to get aggressive on this thing, let's see if we had a supply zone overhead relatively close. I mean, yeah, you could probably look at this as a 2-hour supply. I mean, I don't know if that I would want to do it. I have sold to buy or bought to sell, go against the economic picture. Because you can't deny that ever since that big run up, you can't deny we haven't had a big drop, big gigantic momentum shift, even if it's just temporary. Because remember, that's nothing more than a retracement on a higher time frame. So yeah, I mean, it would definitely be aggressive to try to sell down to this demand. So the basic goal would be something like this. Price comes into the supply and then sell, but you make sure and buy to cover before it even thinks about touching that daily zone. Yeah, Sun FXPR. No, I didn't trade gold. I actually traded silver yesterday, the last couple of days. It was just getting a little bit more stronger of a fundamental and sentiment analysis reading than gold. So I ended up putting my time and attention into silver and thought about getting into a gold trade, but I also didn't get the signals. Hey, look at this. Since Friday, it's just went down. Right? I didn't get a confirmation candle, a bullish engulfing candle whenever gold dropped into some of these demand zones. So I just let it go. And as the result, I'm glad I did, because you can see it's just falling right through everything. So that's why I say 2-hour supply, 30-minute. Let's see what a 30-minute. Yeah. See, we got efficient price structure through here. All these candles are overlapping each other. There's not any real inefficiencies there. The only real inefficiency is going to be down here. See our gap right here, our fair value gap. It's going to be that box right there, that white box. So that would mean I would want to look at this green candle as my supply zone, because all this up here is efficient. You don't have any gaps. But right here you do. So this right here would have been the place to sell. But again, I think it's aggressive because the overall move, I think, is still up. So it's just kind of a juggling act. Just depends on how aggressive you want to be. Now, me personally, like I was saying at the outset of the stream, I'm not interested in being aggressive because it's a thin liquidity week. Okay. Obviously Christmas week, and now we got New Year's week. So it's thin liquidity. There's not a ton of trading volume to boost the moves. Bullish divergence on gold, M30H2. Talk about RSI, Jerry. Let's go take a look at that RSI. I see what you're saying. Okay, there's a divergence because we got higher lows, but down here we got lower lows, right? Oops. Is that right? Yeah, lower lows. And then down here on the RSI, on the bottoms, you got higher lows. Right? So yeah, that's a good eye. It's a great eye. That's a great eye. So that goes into helping the case for this demand zone below, because I would still personally want to see one more lower low and maybe another higher low just to make that picture really stand out. And then last point of no return is just dropping into the demand zone to collect the unfilled orders. MACD. Okay. Yeah. So whether it's MACD or RSI, you're going to, it's going to be similar. Yeah. So, that's great. I don't use MACD. I don't think I've even used MACD. It's been so long since I've used MACD. See if I can even remember how to use it. Now, do you do it like this? You're just looking at the volume kind of going against itself like that on the, what do you call it? I forgot what the word is. What is the word for that? Those bars, the histogram. Yeah. I mean, I'm sure there's a couple different ways of doing it. Some people will use the divergence of the averages themselves like that, right? Which I guess if even in that case, you could look at it this way as well, right? I don't know. You guys probably know more about MACD than I do. Again, it's been probably 6-7 years since I've even looked at a MACD. But yeah, I mean, depending on how you look at it, whether you're looking at the averages or the histogram, yeah, you're getting a same thing. You're getting a divergence. So I just personally like to use the RSI better. And that's just my taste. I mean, that's just what my eyes like the most, because for me, I like to color it and put it in with my volume bar well, I like to do it like that on Trading View, because I like to have my volume spread analysis candles and my volume bar. Okay. Because obviously I'm trading assets where there's actual centralized volume, but I'm also trading currencies that don't have this centralized volume. So that's why that's why I always have two sets of what looks like volume bars, even though the one up top is specifically for tick volume. And it's very similar to the volume itself, but just slightly different. In fact, when I use RSI, let me just do this. When I use RSI, I don't even keep the parameters the same like what everybody else does, right? I change my stuff around a little bit. So for me personally, oh, and I don't even have this set right. I usually keep this thing at a 60 instead of the typical 70-30. I do 60-40. And then another thing I do is the input, rather than the 14 it normally is, I keep it at a 4. It just keeps things a little bit tighter. Okay, if I go back to the standard 14, okay, get you a visual of that. And now let's set this down to a 4. It just tightens things up a little bit, makes it go into the extremes a little quicker. So like something that I was taught was, if I'm looking at a supply or a demand zone, the best ones are formed when, like if I'm looking at a demand zone, the best demand zones are formed when the RSI is below the 40, below the 30. Okay, depends on which parameters you put in, below the line, because that's an extreme zone created, like here, for example. Okay, smaller time frames. If we were to go some smaller time frames right here, this would obviously be a strong move up and then a return to the demand zone. That worked out great. So I'll be honest, I don't always verify that my zones are in the extremes, like whether it's below the 40 or the 30 or above the 60 or the 70, right? I don't always verify it, but I have noticed just in some back testing that those more extreme created zones tend to be some of the stronger ones. So really cool stuff. What else we got, guys? Is there any other items you want me to look at? I'll be on here another half hour, so long as YouTube doesn't kick me off again. Yeah. So yeah, that was my day yesterday. Oh, and by the way, I did also have, just for 100% transparency, I did also trade NASDAQ. I did get I got taken out for a small loss on this thing. And, but I was glad to do it. So look, I took a very aggressive buy on this 4-hour demand zone area right here. I think specifically it was on a smaller time frame. Yeah, it was right in here. So it was in this candle here. So this going into this trade, I knew was pretty aggressive, but I just loved the way the wicks started to form. And then as price came out, this is where I actually got in this trade. Now, I started with my stop loss, okay, obviously under the demand zone. But then as we had price moving up into these highs, okay, this is where I slowly started to trail my stop loss below some swing lows. So this was my last point of no return. Because at this point, again, remember what I said at the outset, or what I say all the time, really. Job number one is capital conservation. So if I know that, that means when I start getting some swing highs taken out on a long trade, I need to start trailing stop loss. So basically, I went from a regular loss, which, as you see, would have still stopped me out. I went from a regular loss to a smaller loss. It's $168 on a 250K account. I don't think I'm too worried about that. Do you? But it's better than a $500 loss, because that was just a 0.2% risk I put on this trade. $500 risk on a 250K account. So, but even though it's small potatoes, I got to think like it's $1 million account. On a 250K account, big deal. You saved $300, right? $300 on that loss. Well, yeah, on paper that's $300, but imagine if you're controlling a much larger position, $1 million position, right? Would you rather lose $500,000 or would you rather lose $168,000? It's a lot of money. It's a big difference. Okay, I'm going to some extremes here, but just to show the point that capital conservation even works in the negative as well. I mean, I didn't want to move. We did at one point go 1-to-1. I think pretty close, or did we just miss it? Let me go double check. 98 points. Okay, so yeah, we did technically. Okay, so here's the thing, guys. We did technically go 1-to-1. So I, by definition, could have went ahead and moved my stop loss to break to break even, or cup of coffee, as I put it. But the reason I didn't is because we didn't even break through this little wick over here. Let's go to a smaller time frame and look at this. It's actually pretty important. Yeah, over here. So I was waiting to move my stop loss to break even officially once we achieved that right there. Once we broke and closed above. Now we got close, but we didn't do it. So I don't want to choke out my potential profits by just automatically moving my stop loss up here at that point. Now, I don't know this is going to happen in hindsight. Now, but again, if this would have closed up here above this little swing high, yeah, my stop loss would have been moved to break even. But because it wasn't, that's why I left it below the swing low, so that I still have somewhat of a fighting chance. Because look at this. We had a little bit of a, intraday support system going on down here. Low here, low here, low here. Right? So, yeah, I wanted to stay in that. So, but again, I still saved money because rather than having a $500 loss, I had a $168 loss. You got to give it a chance. I say all that because so many times people get a little bit of unrealized profits going, and then what do? They close it out. Okay, it's that drug, it's that hit of whatever that they used to do in their college years, right? The adrenaline rush. Oh, I made money. Well, what good is making money if when you have a loss, it's going to wipe out all your recent wins, right? Losses should be tiny. They should be mitigated. They should be small. And the whole goal is cut your losses quickly and let your runners run. So that was me trying to let this thing run. So I'm happy with my performance on this. Yeah, it did get to 1-to-1. Yeah, I could very easily have had a $5 win, right? Remember? Move loss to break even, or in my case, cup of coffee. I call it the cup of coffee trade. So yeah, I mean, it was literally right there in that gray area. But yeah, the whole goal. But I still, I took a loss, but it was a tiny loss, and I'm fine with it. I obeyed all my rules, and especially knowing that my silver trade made money. Like I said, I made $850 yesterday among my two accounts. It's not a ton of money, but it's it's not bad for a slow ass week, holiday week, right? Bullish divergence on NASI. You'll look at that. What time frame are you looking at, Cherry? 4-hour daily? Are you looking at some smaller time frames? Oh, H1. I'm sorry. I didn't even see your H1 there. I don't really see. Yeah, I guess it would probably look different on a MACD. I'm assuming that's what you're looking at again. Let's see what a 1 hour looks like. Yeah. I mean, yeah, like I said, I don't remember a ton about MACD. Are you looking at something like this as far as your divergence? Or something like this? Or are you looking at the average crossovers down here? I'd be interested to know. Because again, it's literally been 7-8 years since I used MACD. I've forgotten everything about it just because I don't use it. Because again, my eyes see the RSI better. So that's why I personally use it. But anyway, yeah, as far as NASI goes, I personally have a demand zone down here at the 25,190 level that I'm watching. This is a 4-hour zone, and it's a beautiful zone too. This is a beautiful zone. So think about this for a second when we're talking supply and demand. And as you guys see, well, like I was just showing with that small loss I had, this demand zone that I took that buy off of, that was way high on the curve, wasn't it? Right? It was high on the curve. Because if I'm pulling out my Hungarian flag example, or just using my little, trend-based fib tool, okay, it breaks it down into thirds, right? Well, look at that. Think about it. I bought in the premium. I bought where we should be selling, right? And I knew that, but that's again why I risk so little amount. Just try to take a stab at it because it's bullish score, bullish fundamental and sentiment score. And I'm not risking a ridiculous amount of money. So I got my small loss. I move on. So there's another demand zone down here, but I also have to keep in mind that it's in the middle. It's diddling in the middle. You guys see the red, the red background. It's because we're in the chop zone. The cheapest way to buy this asset for me is way down here. Got a couple zones down here, but specifically the origin of the strong move up. It's always going to be the highest probability because banks like taking price from higher time frame zone to higher time frame zone. It's a magnet, big old magnet. Now, having said that, okay, I took a small loss here. My silver, put more money in my pocket than the loss. I'm going to possibly look to take a stab at this because if you guys see that blue dash line, that was a former resistance. Support right here. Okay. Danced around here, resistance here, support here. You could say support here. A little resistance. So in other words, this price point, that blue dash line has a pretty good price history of bounces, right? A lot of bounces. So the reason that I'm giving this demand zone the time of the day is number one, pretty good volume coming out of it because that's the intraday New York session open. But number two, that zone, those unfilled orders is right below where a lot of people are going to be buying. Knowing that that is a strong former resistance and support line, when price comes down, you're going to get some buyers. They're going to know that. People have memories. They're going to wait till price drops and they're going to be buying right here. Well, when they buy here, what are they going to be doing? They're going to be putting their stop loss below price, right? Their buy orders are going to produce sell orders for their stop losses, and they're going to have to put it below price. So they're going to be putting their stop losses down here. Okay, these are sell orders. Okay. They're putting their sell orders down here right into a demand zone with pretty decent volume spike. And oh, by the way, there's a nice looking gap. And oh, by the way, price broke a structure here and broke a structure here and even broke a supply zone over here. Look at this. See, this was a former supply zone, right? Did price break that zone? It sure did. Now it slowed it down, but it kept going. So to me, looking at the NASI, there's all kinds of good things about this zone. Again, it's a slight knock. It's a -1, if you will, because it is in the middle of this swing low, swing high. Okay. So that's a slight knock, but I just showed all these other reasons and odds enhancers as to great reasons to take a small stab at this. So yeah, I mean, if price comes down, we're looking at a confirmation entry because it is in the middle. Yeah, I mean, I knock trading in the middle, but that doesn't mean I won't place a trade. I'll just drop my risk, right? And make sure it gives me a confirmation entry. Something like that, right? Break a structure right here. Break a structure right here on this leg. Pull back, and then we get a newly formed demand zone ideally created in this little impulse leg. Just to throw up a whole bunch more colors for you guys, right? So there would be my new demand zone. If, again, I always say this, it's not going to look exactly like that, but somewhat. But yeah, just and then also, guys, with all these retail traders that are buying off the support, they're putting their stop losses down here somewhere in this general area. And just remember that banks need a whole bunch of sell orders to fuel their buy orders. So they're getting to double dip here. They're getting retail stop losses and they're getting unfilled orders from the zone itself. So that's a double reason for them to want to be trying to, if nothing else, layer in here. Now, here's the cool thing. They may be using this as an accumulation zone. Maybe buy a little here and then let price fall even deeper. Okay. Smaller time frame, but there is a demand zone there. So buy a little here, accumulate. And then down here at the origin of the strong move, maybe this is where they put in their last little accumulation order. Right. So basically, if I'm a bank and I've got a giant order and I'm not trying to make money in 5 minutes, I'm trying to make this a long-term swing style trade or a position trade, then I might be doing this. I might be buying in this zone a little bit, might be buying a little bit in this zone down here, and then I might be buying a little more in this zone down here. And then what happens? Let's say price rolls around. This is actually a really good thing to show. So come here. So price comes all the way down here, right? So let's say price finally starts to bounce up a little bit, downtrend, but a correction. Actually, let's do this. Okay. When price starts coming back up for its normal correction, maybe their final buy is right here. They're lift off, right? That's their last point. But what they're doing is this: they're accumulating positions. Yeah, when they buy in here, yeah, it'll go into the negative, right? They'll buy a little more here. Their position is going to go into the negative. By the time they buy down here, people look at them like they're stupid. This is how accumulation works. So the bank has a negative position, but they do that because they know that in the long run, they're going to get their way and push price up to a higher time frame overhead supply. So then they start profiting, take a little profit off here. Okay, green. They take a little more profit here. Then they close out the rest of their position up here somewhere, right? So think about that, right? They're buying. So they're in the red. They're buying. And then they're just slowly distributing their position. They're slowly selling out. Sell, sell, sell. Well, clearly these boxes are higher than these red ones, right? That's how they make money. I mean, they also have prop traders and they have, algorithms and all that other fun stuff. Or, all the different types of traders that they have. But that's essentially what they do, because they've got a lot more patience than you and me, right? They're in it for the long haul. They got to show those steady gains for their shareholders or anybody that they're, that's paying them money to make them money, right? So accumulation, that's accumulation. And the exact same thing is true in reverse for distribution. The process just repeats. Okay, they're selling, they're selling for profit, and then they just start the process all over again. Okay. This is where they're going to start shorten. Okay. Short. Price is going to sometimes go higher. They're going to short some more. Might even go higher. They're going to short some more. Okay. They're automatically in the red, right? They've got a negative balance. Oh, they're losing money. They're stupid. What the hell are they doing? But then all of a sudden, they get price to roll over because they can do that. They keep it thug like that. They keep it gangsta, right? Buy to cover there, some of their position. Buy to cover here. Buy to cover here, right? Buy to cover here. So in all the cases, they automatically start off in the negative, drawdown, if you will. But by the time they manipulate price and get it over the hump, they're making money. That's how it works. That's how the banks play their game. Don't let anybody tell you any different. And they do that because they have to have our liquidity to fill their orders. They have to. They cannot put their full position in like you or me. They can't do it. See, so for me, I'm waiting on this demand zone. You think they could put in their full position if price comes all the way down here? No. There's no way they could. Why? Because they'll get a horrible fill. If price comes down here to the demand where they put in a full position, price is going to lift off and they're going to get filled in all these bad places. Okay, that's a horrible. Let's get rid of some of this crap real quick. Get rid of some of my drawings. I didn't mean to get rid of that one. Get rid of these drawings real quick. Get my zone drawn back. But yeah, you know, if they try to put in their full position, they might get, obviously they'll get some, you know, some of their fill there, but they'll be getting fill even higher up. They're getting horrible prices. Okay, so rather than all of their order filling down here, some of their order is going to fill higher up like this. Well, then they've shot their reward risk in the foot. So this is why they have to layer their orders in. So I know I just went off on a side tangent on that. Sorry about that, but every now and then it is nice to kind of show you guys how accumulation and distribution works. That is Wyckoff theory. Wyckoff. I think I have a really cool website that you guys might like that kind of explains it a little deeper. Let me see if I could find that. I might try to find that and share that tomorrow. Share that on the next stream. Which, by the way, guys, you tell me. You guys want me to stream on Friday? Because I was kind of in the middle of doing it or not doing it. Let me know, guys. Let me know if you want me to stream on Friday. It's the 2nd, okay, January 2nd. I was thinking about it. I think one of our coaches is and one isn't. So I was just trying to decide if I have a handful of you that want to show up on Friday, I'll probably do it. But if not, no big deal. If you guys are busy or taking an extended weekend, I totally get it because I'm kind of right in the middle. But if I get a couple, 3 of you mention that you want me to show up on Friday, you can definitely do that. Just let me know in the chat if you would. Okay. What else we got over here? How much do you earn daily, sir? I do not look at earnings per day. I don't do that. Because when you start putting amounts in your head, then that's where the bad decisions start to come. If I tell myself, oh, I want to make $50 a day or $500 a day or $2,000 a day, right? Well, what happens when you get towards the end of that intraday session and you're well short of your goal? What do a lot of people do? What does human nature tell us to do? Do something stupid, gamble, right? Bet all on black or bet all on red, right? I don't look at it like that. I look at it as 1% growth a day. Hey, did I learn something today that I didn't know yesterday? Hey, did I conserve my capital? Because again, capital conservation should be rule number 1 for us as a trader. Yeah, we want to make money. That's obviously the goal of all of us. But goal number one, guys, is capital conservation, which is why I showed that example earlier for NASDAQ. I could have very easily lost $500 on that loss I had yesterday, but I only lost 168, and I'm happy because I followed all my rules. I followed all my rules on my silver trade. I made $850. Okay. So yeah, some days I don't know. Some days I'll lose 500. Some days I'll win, probably average about 1,000 on my winners, about 1,000 or so. I think my biggest win this year was $4,900. That was one where I pretty much turned into a scalp trader for like 2 solid hours. Hey, there's Algo. But yeah, biggest loss was $1,250. Biggest win was $4,977, I think it was. I was a little annoyed because I got over 5,000 on the trade itself, but by the time my swaps and fees came out, it dropped it back below 5,000. I'm like, are you kidding me? Just wanted to get that 5,000 round number, but I'll try and do better the next time. That was in October when I had that one. So yeah, we got a few minutes left, guys. Again, just let me know if you guys want me to show up on Friday. If you guys want to take an extended weekend, I totally get it as well. I can play either side of it. I can tell you the volatility or the liquidity won't be good on Friday, just like it has not been great the last couple of weeks. But if you guys want to do some learning on anything, I can definitely. I got nowhere important to be Friday morning. Okay. So otherwise, I'll just show back up on Monday for sure. And we'll just go hardcore at it. So you guys just let me know. We got about 10 minutes left. What else can we take a look at? Euro. Let's take a look at our shorts ideas. Euro Aussie, pound Aussie, because I don't think we looked at those yet. Euro Aussie, where you at? Okay, Euro Aussie here. So on Euro Aussie, yeah, I still drew up that downwards trend line. I'm looking to see if it wants to respect. Now we're pretty deep. We're pretty down into the low areas. We're in the discount zones, guys. We're in discount. Okay, swing low way back here, swing low where this price dropped into this daily demand. Okay, we had a bounce out and we've come back to it. So if anything, it'd be a little tough to short anything down here. I would need a pullback or a break through the bottom of this area and form a new set of zones. So looking at supply, I'd be looking at this supply zone right here, 1.765 level. Okay. Now it doesn't have, I don't think, a daily around. Yeah, so there's not really a daily zone to protect it. If I go a little higher, you guys see this yellow rectangle. Okay, there's a daily supply. I can't use this candle up here as a supply zone. Let me get rid of that. Get that off my screen. So I can't use this as a supply zone or this, right? Why? Well, because it's efficient price structure right through there. These candles are all overlapping each other. Okay. The first inefficiency I see is right here on a daily time frame, higher time frame. Because again, there's our gap. That's the first candle giving me a gap, that little white box. Okay. So that shows strength on this leg out. So I have to pay attention to the origin of that strong move. Right? So let's go into that daily and see if we can find a 4-hour. And I think we already decided this yesterday that we didn't have one. See, all these candles are overlapping candles to the right. This candle overlaps this one overlaps this one, yada, yada. Well, that one looks pretty good. Why aren't we using that, Tiger? We had a gap right here. Did we not have a gap right here, Tiger? Why can't we use that as a 4-hour candle? Well, because that gap got closed over here. Okay. This wick came over and touched this wick. If you just draw a straight line horizontally, that closed the gap. It closed the gap, and that at one time was this candle at one time was a supply zone. But as you see, it wicked in and touched it already. And then what happened? Bottom fell out, went down. So that candle is no longer a 4-hour supply zone. Now go to some smaller time frames. We may get a different story. Let's go look. A 2-hour time frame here. Yeah, I guess maybe you could say this might be a supply zone, but it's not very strong, guys. It's not like it had a big push away. I like gaps to be big. So that wasn't a very big gap. I'm not too excited about it on a 1-hour time frame. Let's take a look at or on a 2-hour time frame rather. 1-hour time frame. It's a little bit better. It's a little bit better if I'm looking at this candle here. You guys see the gap is a little bit better. It's still not exciting to me, though. It's just not exciting. I like to see bigger gaps. I like strength. Remember, I like zones that provide gusto. And that's just not a lot of gusto. I want my candles like this, or my gaps, bigger gaps like that. That's what I'm after. That shows real strength and gusto. So I'm just not overly pleased with this daily supply. It's not really providing me any small time frame gaps of note. So I would probably just resort to the origin of the overall strong move down. But even at that isn't the greatest yet, because so far it has not broken this low. Right? Okay, see that line right there? I would have more respect for this zone up here if it breaks this zone down here. And obviously, not to mention the rest of the daily demand that we've got, that all these traders buying here, buying here, buying here. They got to put their stop losses somewhere, right? So their stop losses are going to be sell orders. Sell orders right inside of that daily, or what happened to my drawing? There we go. sell orders inside of the unfilled orders. So liquidity, unfilled orders. Big banks need sell orders to fill their buy orders, right? So I kind of like the idea of coming down here and testing for a possible buy to the long side, but it would have to prove itself. Show me a break of structure on maybe a 5-minute time frame or something small like that, and see what we can get. See what we can get on this smaller time frame. So that's what I'll be watching today. See if we can get anything on the Nikkei. It's been a while since I've traded the Japanese index because it's just been hiding out in limbo and neutral on my top setups for quite a while. So anyway, guys, I think that's about it for me. Happy New Year. Oh, thanks, Sam. Happy New Year to you, brother. Yeah, guys, I'll post on my YouTube page here directly after I come to my decision about Friday. Like I said, I might stream, I might not. I know some of them are and some of them aren't. Some of the main people I watch, a couple of them are, a lot of them aren't. So yeah, just stay tuned to my channel that you're on now. I'll actually put a real post in there. Okay. Go to my channel real quick here. Yeah. So guys, I'll put an actual post right here on the posts. Just keep an eye on that for the day or tomorrow or whatever the case is. And I'll put on there if I post or if I stream or not on Friday. Okay. So with that, much love to you guys. Happy New Year. I'll see you next year, which is Friday. Have a great day. Don't drink too much champagne. Holla at your boy.